What's going on, everybody? Welcome back to the channel. And in today's video we're going to be going over the only trade I took today. I took one single trade today, but I think it was definitely a good one and one that we need to look at. And not only that, we kind of need to talk about like why sometimes taking one trade a day or even just trading less than you typically do can end up being a profitable strategy in the long term. I don't know if you guys ever heard that saying, but trade less, profit more. It's definitely true in the stock market. Find that sometimes when people are looking at 10 different stocks, they don't have a really good plan for none of them, because all of them they have, they kind of look at for a few minutes, then move on to the next stock. And if you just took a step back and only really looked at one stock, you probably may end up being more profitable. Well, if you learn about stock market, crypto market, and learn from a 7-figure day trader, make sure you hit the freaking subscribe button down below, because we got a ton of free advice on the YouTube channel. If you're looking to get started with a nice group and learn from me, this is the best place to be. You probably have a few hundred videos on this channel, so make sure get your education on before you get into the markets. But let's break down on why trading less actually is somewhat beneficial in the stock market. And I really break it down to three main components. And number one being your planning, right? You only have so much time before the market starts. Let's say you have a job, you have school, you have so much time after those things that you can really plan for the markets and take your trades. So when people trade 10 tickers, 10 symbols, 10 pairs, if you're trading forex, crypto, where the situation may be, if you only have an hour a day and you're looking at 10 different things, that's less than roughly 7 to 8 minutes that you could have been looked at a certain symbol to create a plan. Now that's not a whole lot of time, but now let's say you take a step back, you only look at 1 to 2 symbols, you have between either 30 minutes or 1 hour to look at both, and guess now what? You can pay attention to all those little details that you could have missed with a much smaller time frame, right? So that's why I mostly stick to trading the indices. That can be SPY, Triple Q, US 30, sometimes I'll take a look at things like Tesla, Nvidia, and a couple other stocks, but you also have to understand that for my part, I'm a full-time day trader. I come in, I'm literally in an office, I live in my house, I rent an office for $1,800 a month. I rent a beautiful downtown area so I can look at the skyline, and I come in and for 8 hours straight I'm trading, I'm coaching, I'm mentoring, making videos. So I'm in a little different situation. I have the time and the luxury to look at different things, as well as being more experienced. But if I was new, if I was a brand new trader that's trying to do this on the side, trying to make $100 a day, the number one thing I would do is I would take a step back and either trade the SPY or the Triple Q. That can be the NDX, the Nasdaq, the ES, depending if you're trading futures or whatnot. But that's the main reason, is just the timing and planning of situation. Number two is your mental aspect, right? The more things you look at, the more your mental kind of goes away, because you cannot focus on just one thing, and so many things are moving. For example, you see this SPY sometimes diverge from the Qs, that's going higher, the Qs is going down, and now your mental is really getting affected, because you're like, should I go long on the Q, should I go short on the SPY, what is really the situation is. Maybe Tesla, for example, they tanked while Microsoft was going higher. Let's say you looked at both, you don't know where to go with it, right? And it really affects your mental state when you're trying to trade. And remember, as a trader, one of the number one goals is take the emotions, right, your mental aspect, and throw them out the window and just trade based on what you know and your analysis. Because most people, you have the right tools, you have the right analysis, you understand the markets enough that you could be trading if you just get rid of some of that mental. So that's going to be your number two reason, is get rid of those mental and mostly just focus on one stock. It will keep you also a lot more calm. And number three, lastly, is familiarity, right? When I mean familiarity, is that you know how a certain stock, a certain asset, a certain ticker is going to trade if you trade it over and over and over and over again. Let me give you a great example. In 2021, my biggest gainer was ticker symbol NVDA. I had 2 days, I made over $200,000 on that stock. At the time in 2021, NVIDIA was popping off with 10+% gains on the day. The contracts moved really well. It did not have a huge market cap, so whenever it would move, the contracts would go up insane, giving me huge returns. 2022 and 2023, NVIDIA has been actually one of my lowest revenue stocks, way different in 2021. The reason being that the way it traded, it changed because they had a stock split. A stock split is when they cut the share, they double the shares and then they sell the shares to the market, right? It's good for the investors, it's good for the company, the ticker becomes cheaper, but I guess what happened, we just did, you diluted the shares, meaning the stock will not trade the same as it used to trade. Exactly why in 2021 I got familiar with it. I used to trade it almost every day. And in 2022, 2023, since pretty much the way it trades has changed a little bit, I'm not familiar with it as much, and I'm struggling with it. That goes because the familiarity I had with that stock, that kind of almost a bond, you want to call it, did change. But now with the S&P and the indices, you're not going to have that. That's why I recommend people stick to the indices, as well as the volume is always going to be there and the spreads are always going to be there. But that's essentially the 3 rules I want to give you on how you can stay calm, not get FOMO, and just stick to your strategies and become a profitable trader. Now let's go over into the trade I took today. It was off the triple Qs and it was on puts. It was short side. Well, here is the triple Q and kind of what I was looking at today. First, if we zoom it out, this is a larger time frame. Well, currently we're on a 5 minute, but using it considers this overall flag after this move higher in this large time frame is a move up, a consolidation, and finally with a breakout. But as you can see here, what happened during this breakout? We actually broke out. This was after hours market, right? So we actually opened up here. We open up above this level. We open up above the breakout. And as you guys know, when there is a breakout, I don't like to enter in a breakout, regardless, even if I was catching it during market hours. So during the pre-market, I had this level of resistance right now here, as you guys can see, right over here, roughly right around this level. And I was waiting for price to hit right around that 312 resistance level and looking for a pullback. As you guys can see, we got really close. Let me bring this down a little bit because I had it on my finger swing right around 312. We got really close, and then eventually pull back. So I was looking for a pullback to pretty much retest this top of this flag and then potentially go long there. But the play I was looking at was a little bit of a pullback. Also, to coincide with that, with a lot of different confluence with, if we look at this move up here from the pre-market, it was almost a 2% gap up. If you gap up almost at 1.5%, you're not really looking to go long because now the risk reward is very skewed. You already went up so much, at some point there's going to be some profit taking and things like that, unless there was some kind of massive news that made this push go higher. But there was no news today, right? So we gapped up and I was staying patient. I was like, I don't want to chase after a big move up. I want to look for the pullback and enter in some puts at the right timing. And you guys know, one of the ways I like to trade is with week off patterns. Week off patterns, it simply means you have a move up, then you have a distribution phase, which is a consolidation, and then you have a move lower. Let me know in the comments below if I should make a whole video on those. I won't get into this video because it'll probably make it really long. But if you were in the Masterclass 2.0, that's about to end this week. One of my main classes has been talking about wick off, and today was a great example on how I use that to enter on these puts. So you guys can have this restaurant right here, and the way I even mentioned in the chat, it was called out. And around 311.7, I start entering some puts, and I said I'm gonna start entering at 311.7 per 311.7. Knew that maybe if 312 the hit could have been too fast, it could have not got filled. I'll rather get in a little early, still understanding with my low risk to reward. Right, and kind of seeing this liquidity grab was what gave that away. See, this is called a liquidity grab. You break grab of the higher day, and then you quickly have a big red candle. So I will have this marked as liquidity grab. That would be a buy side liquidity. I mean, just on the bull side, you take that liquidity and you bring it down. So I had also had this little marked out where you pop right above, and then you usually have a quick red candle that pretty much takes over the green candle that was the so-called breakout candle. That's why I don't like to trade breakouts. So a lot of times end up being liquidity grab, and you could get a nice entry on the opposite side. So it's exactly what I was watching in here. It's exactly what happened. And I also mentioned in the chat, I was like, hey, if we hit 312, more than likely add more to my position. That was my major zone. This zone right here was my major zone that I was looking at. I was like, if we get into that zone, I'll probably intend to add more, and I do get further expiration. In this case, it was tomorrow, so I don't get 0 dates, so I have time to hold on to it and lower my risks overall. So that was my trade. It was a short position, would have been with an entry right off of this, with a liquidity grab right off of that, and looking for, guess what, looking for this. At the very least, this 310 level, there was the flag breakout here, and it also was the golden pocket. I mentioned this in chat. From the gap up to the highs around here, you have this golden pocket, which is the 0.618 to 0.668 level, right roughly around this level, this golden pocket on top of this trend line here, you just broke out of for this counter trend pushed higher. Right, so this was my pretty easy setup right here. Requires some patience here as you were waiting for this consolidation. You don't want to get shaken out. That's why I don't like to do 0 dates. 0 dates move so fast, so quickly. More than likely you would have gotten shaken out of that position. Really nice, really simple trading, guys. I made a few $1,000s on this trade. What do you need? What else do I need? It's almost a better than 1 to 3 risk to reward trade. What else do you need in the day? Like, how much money are you looking to make in that day? I don't see any other setups. Guess what? That's it. I'm gonna take the green day. Why am I gonna force something and give away money to the markets? As I always try to tell you guys, your goal should be take money from the markets, not give it back to the market. So that's very simple. Quick trade here that ended up being really nice. Hope you guys learned a thing or two from this video. Try to make some of these daily updates where I can break down some of my green trades and some of my red trades. Today I did not have a red trade, but when I will, trust me guys, I'll show you guys the red trade. I'll show you guys how much I lost, even if I'm red for the whole day. It's all about part of the learning experience. It's all part of your trading journey. As always guys, if you like more videos like this, if you want to learn more about the stock market, go down below, hit the subscribe button, leave in the comments what you're gonna learn next, and peace.